Hey, what's going on? It is James here with Crypto Common Sense, aka 3Peaks Trading. And in this video, what I want to do is I want to bust one of the big myths out there, which is you need a lot of money to get started trading. Or if you don't have a lot of money, there's really no point to it. You're never going to, get anywhere and all that kind of stuff. One of the things I'm not going to go deep into in this video because I don't want to ramble, but one of the things about me is I came from very humble beginnings. And when I was young, my family didn't have a lot of money. My dad passed away young. My mom passed away young. I ended up being on my own at 17. And I had a few adults that I come in contact with. For example, there was a guy I worked with at Domino's Pizza when I was a teenager. And he was in his 40s, early 40s. He was working at Domino's as a second job. And he told me, James, don't make the same mistakes I did. Start investing now. And by the time you're my age, you'll already be set. And I remember appreciating the advice. But in my mind, I thought, bro, I don't have enough money to get involved in the markets. I don't have enough money for it to even matter. He was talking about how you could double your money every 7 years through these simple Roth IRA accounts and all this kind of stuff. But the reality is, when you don't have 2 pennies to rub together, doubling $10 to 20 doesn't sound exciting, or 50 to 100 or whatever. And so I didn't take his advice. His name was John. I didn't take John's advice, and I, blew every dollar that I made. So I want to help other people avoid that mistake that says, hey, unless I've got a bunch of money to start with, it's not worth it. So let's look at 2 things in this video. And I want you to stay with me because you're going to probably be absolutely blown away by the math behind this. Let's say that you are a swing trader, not even a day trader. Say you're a swing trader. And say you're winning, we'll call it 30% of your trades. Okay, so you're winning 30% of your trades. And because these are swing trades, not day trades, you're not going for 2R, you're going for bigger wins. We're going to call it 5R, okay? Just as an average. Some would be bigger, some may be a little bit smaller. Obviously, some would be losers, but on average, let's say that it runs 5R, okay? And let's say that your risk tolerance is much smaller. It doesn't actually matter, but just for this example, let's say that your risk tolerance is actually $5 per trade, okay? If you had a $500 account, 1% risk would be $5 per trade that you were risking. So the average win would be $25 and the average loss would be $5. And after a year, if you took just 2 trades a week for a year, you'd have taken 104 trades and you would have netted roughly 83.2R. 83.2R, okay? What that means is you would have netted $416 on a $500 account balance. But let's say that the tax man, wherever you're at, I know some countries don't tax capital gains, but let's say that you're in a country like I am that taxes capital gains. And, let's just say that, maybe you get to keep 75%. Okay, 75% of your profit. So let's just do the math real quick. If we made 416 and we get to keep 75%, what's that going to equal? It's going to equal $312. Cool. All right. $312 divided by 500 is a return of 62.4%. Okay. Now, here's where things are going to get interesting. We're going to just, on the left here, I'm going to put some numbers and we're going to say this is the year, okay? Like year 1 trading, year 2 trading, etc. So let's do this. We'll just go down the list there. Okay. So first year you get $500. You do your thing. You make $312, which is 62.4%. Cool. So, oops. Could actually just delete this. 1.62. All right. So $812. Sweet. Let's say you do the same thing year 2, but now you're trading with 812 instead of 500. So after 2 years, you're going to have 1319 in this hypothetical example. All right, still nothing to write home about for most people. $1,300 is not that exciting. you'd be risking like $10 a trade. But by year 3, you're at 2,100. Still not that exciting. Now you're risking about $20 a trade. Year 4, you're up to about $34 risk per trade. Year 5, year 6, 7, 8. Now at 24,000, you're starting to get respectable, right? Hey, we're 8 years in. By now, you're probably winning even more trades because you've been trading for 8 years. But watch what happens. Again, we're talking about a $500 balance to start this thing. All right, year 9, 10, 11, 12, 13. We're suddenly in the triple digits. 14, 15, 16. 16 years to go from a $500 starting balance to over $1 million after taxes in this hypothetical example. Now, that's what I didn't get. If I listened to John back when I was 17 and got started earlier, maybe I didn't make $1 million because I wouldn't have been trading, so I wouldn't have been making as much money on my returns. But it would have meant that by the time I did start trading, I would have had even more money in those markets. And I know some people are looking at this going, well, that's just crazy. Crazy talk, 62% a year. Guys, it's not. It's not crazy talk. I know that people hear these articles about people like Warren Buffett and averaging 20% and all this. There's a reason that Warren Buffett averages 20%. He is trying to buy and sell, in some cases, hundreds of millions of dollars worth of stock. I don't know how that game works because I don't have that much money. But knowing what I know about liquidity, just from the size that I trade, he can't do what I can do in terms of moving in and out of the market, or what you can do moving in and out of the market. Warren Buffett is trading at such large sizes that his opportunities are much more limited. With smaller traders, and a small trader is somebody that's trading, maybe even up to $10 million, like our opportunities are so much larger than somebody like Buffett's. He just can't, get enough people on the other side of a trade to take full-size trades. But this is actually like, I read this thing the other day from this trader who, claimed to turn a little over $9,000 into 81 million. And he was talking about, if you're successful, you should be at least doubling your account every year. I know people are like, oh, it's nuts. It's not. That's just it. It's not nuts. It's just that people don't look at the math. Okay. Look at this math. 30% win rate. 30%. That means that this person would lose 7 out of 10 trades. But because they're swing trades with larger reward to risk targets, this is almost doubling an account before taxes, right? 83.2R is 83.2% if you're risking 1% per trade. And if you bump that up, let's say that you're trading, like I said, for years, maybe you're winning 35%. And now you're over 114R. So now you're more than doubling the account. Okay. And if you're a day trader, just to kind of show you this, day trader, you might be winning 40% of your trades, and maybe you're getting 2R per trade. You're thinking 20R? No, because if you're a day trader, you're probably taking at least 2 trades a day, right? 2 trades a day times, we'll call it 50 trading weeks a year times 5 trading days a week. It's 500 trades. Again, 40% win rate with a 2R system. There you go, 100R, which is doubling your account, okay, before taxes. So those numbers, that's the math behind it. It's actually very, very simple to do this. It's just people don't because, of all the stories that they've been told, or maybe the stories they're telling themselves. Let's keep going this just a little bit. Let's say 20 years, okay, and we'll just cut all this out. So this person, after 20 years could have turned $500 into $8.1 million. And again, that would be winning 30% of their trades, taking 104 trades a year, and averaging 5R return per winner. Okay, meaning they make $5 for every $1 they risk. Look at that. 500 to 8.1 million. Now, some people will look at this and say, yeah, but it takes, 10 years or 5 years or whatever before it starts, really meaning anything, or whatever the number is for you. Okay, well, people go to college all the time for 4 years and spend tens of thousands, in some cases, hundreds of thousands of dollars while making nothing. And then they have to go out into the job force and hope to find a job. So your education in this case, it doesn't actually cost you money in this example. You would be getting paid a small amount of money to learn. And because this example is talking about swing trading, this is something that's absolutely doable around a full-time career. You're talking about maybe 2 hours a week. You're doing some scanning and you're taking a couple of trades a week. And by the way, I have nothing for sale in this video. Like, I have no reason to tell you this and steer you wrong. Like, I'm not pitching anything. I don't have a course that's going to teach this to you today or anything like that. I'm simply saying, like, it's sad to me and disheartening to me that a lot of people who are in really tough financial situations are led to believe that there's no way out, because there are ways out. And whether it's through trading or through business or through something else, usually comes down to educating yourself, right? Not just listening to people, but really educating yourself. And, if you spent the first 3 or 4 years, of this and made nothing, but you learned how to properly trade, it would be time well spent, And just to give you an example, let's say this is $100. So you start with $100. Guess what? After 20 years, you're still in the 7 figures if you're getting that type of return. That's after taxes, right? Again, in this hypothetical example, everybody's tax situation is going to be different. Let's say that maybe you're somebody that's got a little bit more money. Maybe you got $5,000. Watch how much faster this goes. Now, after 11 years, this person could potentially be at the $1 million mark. After 20 years, they could be at $81 million. Now, again, once you start getting up above 10 million, especially, it probably would slow down quite a bit, because now you are also going to be running into liquidity issues where you can't take your full positions and things. And it just depends on the stock. I mean, some stocks like the QQQ are so liquid, you could probably take an $80 million position, no problem. But you're not going to take the smaller stocks with full size. But I would assume that if your problem in life is you have too much money to trade, you'll be okay with that, right? So that's 5,000. Let's say that somebody starting with maybe 25,000. Again, in some ways it's shocking because the end result is like a bigger number. But if you really look, like, it doesn't change that much in the short term. So somebody with 25,000 can get to 7 figures in 8 years. Somebody with 5,000 could get to 7 figures in about 11 years. Somebody with 1,000, it would take them about 15 years. So it's not like, oh, if I got 1,000, it's going to take me 50 years, and if I got 25,000, that's going to be 5 years. No, it's just a few years difference because of this compounding effect over and over and over again, right? So, and if you're somebody that maybe you have more money, maybe you have 50,000, for example, then, again, 7 years, you can get to that 7-figure mark, okay? But here's the thing. No matter whether you have 50,000 or 5,000 or 100,000 or 500,000, whatever it is, if you're not yet profitable, it is my firm belief that why not start out by risking maybe $5 or $10 per trade. And then after you're profitable, maybe 6 months of, hey, I've been profitable for 6 months in a row, or 5 out of the last 6 months, or maybe 4 out of 6 months, because, you're going to have down months. Then maybe bump that up and say, hey, I bumped my risk up to maybe, $20. And again, this all depends on account size. The general rule of thumb is you don't go over 1% risk. So whatever your account is times 1% is the most you're supposed to risk. Okay. General rule of thumb. I wouldn't risk more than 1%. But you don't have to risk the full 1%, But yeah, this is, the power of compound returns. It really is a life-changing thing. And especially the earlier you start, because maybe it does take you 10 years to build a significant bankroll, maybe, So yeah, whatever you start with, just start, and even for somebody that's on the fence, start, because maybe you find out 6 months into this that you hate this trading thing. It's still valuable. If you hate it, don't do it. Now and you don't have to waste time and energy thinking, hey, I might want to do that. But I think for most people, they'll drop out. Most people will struggle. Most people will say, oh, it's not worth the time. I'm not going to jack around with this for, $500 a year profit and stuff. And they'll be the people that, 10 years from now wish they'd stuck with it because they could have been here. In 20 years from now, they could have been here. So what other profession can you start out with $500 and 20 years be somebody that's worth nearly $10 million? Not many. Not many jobs are going to give you this level. Look at the raises this trader will be getting every year. What job out there is going to give you these kind of raises for being loyal to them? All right. So I'll go ahead and wrap the video up there. I got a little bit of editing to do. So if there's, some spots where it feels like it jumps around, I apologize. I got to rambling a few times, and I don't want you guys to have to waste time listening to me getting long-winded at 2 a.m. So hopefully you enjoy this video, and hopefully it does open some people's eyes and maybe excite you a little bit, because there's a lot of opportunity around us right now. The fact that most of us are able to sit at our desk and have access to the markets and have the ability to trade is just a phenomenal opportunity. And that being said, I'm obviously some guy sitting in a spare bedroom, so nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice before making any type of investment in any cryptocurrency, equity, Forex, anything that you can trade essentially. And also, because I mentioned taxes a few times, let's just be clear and say, I'm not a tax professional. You should always seek out professional advice from a tax professional as well to look at your own personal tax situation. All right, if you enjoyed the video, give it a thumbs up. Make sure to leave me a comment. And also, if you haven't already, make sure to subscribe to the channel. I'd like to do some more, educational content. Unfortunately, I do understand that, because my videos aren't super hypey and make $1 million tomorrow kind of stuff, for a lot of people, I'm like this sober guy at the party, which is no fun. But you know what? At the end of the day, I'm going to tell you how it is. I'm going to tell you the real stuff. And some of you will like that. You'll take it, benefit from it. Some of you will be bored by it, and you'll go chase the next shiny object and probably be chasing your tail for years to come before you realize, oh gosh, that James guy was onto something. All right. So hopefully you enjoyed it, like I said, and I'll see you in the next video.